All right, let's jump into it. What do we at? 10:36 on the 4th of August. So we got what is it? Tuesday? Wednesday? Yeah, it's Wednesday. Jeez, you lose track of the days and that. I do know it's GDP day. That's what I do know. That's the main ticket item through Asia at the moment. And look, I'll just do a quick sort of follow up on Aussie because obviously this is what I've been sort of playing the short side of this, and I've just put this thing on repeat time and time again through the last week and a bit, and it's been very profitable. I mean, we've been sort of buying all the way up through here, but there was just so many little indicators coming into this area. Like I sort of mapped them out, charted them out as they were happening. I mean, again, look, it's not hindsight trading in that. It's about sort of planning it and just sort of seeing how it all sort of really comes together, and then sort of seeing how I can sort of replicate that time and time again. But yeah, so look, we've sort of got price target was hit early yesterday and that. I put these posts up sort of through the day on X as well. But we had the wedge measure move breakdown. So size of the wedge here is the size of the wedge down here. That's what gave us our price target. You could see that the market took that opportunity to take some profit. The retest here came perfectly in line with where that support had been, around that 50 line. I actually sort of got back on short with this, and I had another position to get short, and literally a tenth, like again, I put these posts up, a tenth of a point I missed this buy. It's almost sort of comical how much I sort of missed that buy. Like I'm talking a tenth of a point. So, very, very tight. But that's all right. That's the name of the game of that. I still got the shorts through that sort of second move there. And yeah, I've still got some shorts running at the moment because we're coming down into, yes, this first buy zone here. But, you got to sort of think and weigh this up at the moment. Is the market sort of front running weak GDP numbers? Because at the moment, I'm having a look at DXY because I've got all these sort of positions. Sorry, all these positions. Sorry, I just had a position close in that while Aussie's sort of dumping down. But I've got all these charts out in front of me, so of course I can see all these things happening at once. And DXY is selling down, but at the same time you can see this live at the same time here. Look, I'll put them side by side, and let's put DXY on this. Let's put it on a. Whoop, go back. Make this one DXY. Put it on time frame that we can actually see something. We can see here as it's opened, it's coming down. Aussie at the same time, put that on the 15. That's also selling down. So yes, I understand that DXY isn't sort of made up. Aussie isn't part of the DXY, but the thing is, DXY is basically sort of the market's overall collective view towards the US dollar. And you know what I mean? When they're selling US dollar against the basket, against euro, against pound, against Canadian loonie, or whatever you want to call that one. So I've just taken some profit on a few of these positions just to lighten things up a little bit, just in case we do get a bit of a bounce. That's all right. Um, so anyway, back to what I was saying. So I'm getting distracted here. Let's get back onto one chart and let's have a look at what's happening. So yes, we are seeing a sell down here. So expectation with GDP at the moment is so that's another position filled. That's good. GDP here. So 0.1% previously, 0.2% expected. These are very low numbers. These aren't the kind of numbers that go in line with, the economy is doing really great and the high interest rates aren't affecting it in a way of which sort of moving sort of it towards potential recession. And remember, the two things that the RBA or any central bank really are trying to balance are inflation and recession. You want to sort of get the rates up to sort of like, bring inflation down with this current scenario. You got the rates up to sort of keep to sort of like curb spending, bring inflation down. But it's a balancing act because if you do that too hard and for too long, well, businesses suffer. And of course, then you sort of go into a sort of a bit of recession. So, if you've got sort of super weak GDP numbers, that's not telling you, oh, things are all fine in the economy. Yes, we may be sort of getting inflation down, but at what cost? And that's the big thing. I think that sort of like they've got to sort of really sort of balance out. And so if we continue to get these weak numbers, and as I said, the numbers are looking like they're going to be coming in weak, and people are getting out of the Aussie dollar. I mean, I just took some shorts off and that just to cover it because we're coming back into this little zone down here. Which, if we sort of zoom out and have a look just on a technical basis, we've seen that the market has had quite a strong reaction from this level here previously. Look at the move up through here. Yes, I mean, there's other factors involved, obviously, and obviously the scenario was a little bit different as it was coming into it. But there is a reasonable expectation that you might see the market. So this is just keeps going. Just back in 2 secs. All right, and back. Yeah, just had to clean up a few of those positions. So yeah, look, in short, we've got the market seemingly sort of front running this sort of move. And this is why I showed DXY a second ago, because DXY is the main driver across the board. Everybody knows this. But of course, we've got more sort of pressing issues on the local front, which are, as I said, weak economic data, which, the RBA needs to sort of take into consideration. And if we get weak numbers, you got to play this thing out. Well, what are they going to do? What's the reaction going to be? Whether it's what the actual action that RBA take, that's a different story. But what is the market thinking? What's the expectation from this kind of stuff? Well, weak economic data means that you need to sort of cut them a little bit of slack, and you don't cut them slack by hiking rates. And as we know, higher rates is the bread and butter for a currency strength. So if it's a more dovish kind of outcome that's required, hence the sort of the loosening of the sort of tight restrictions, i.e., sort of like maybe not hold the rates as high for as long, and certainly not hike, because that's the thing. Remember, the big talk through here was not only US dollar weakness, but also bullish coming out guns blazing, very sort of strong. We're going to do what needs to be done. And good on her for doing that, because, Lowe was just so pathetic with this. He was slow. They were slow to raise rates. They're slow to cut rates. They're always behind the ball, behind the curve. So, you know what I mean? Like, there's a lot of factors at play here, but certainly sort of like, as we sort of see the thoughts sort of go a little bit more to the dovish side of stuff, it certainly takes the extra big shine off Aussie. And this is why we've seen the sell down from the top side over here. Now, again, US is looking at rate cuts. That is the big story. That's the sort of, the story, actually, the story at the moment is 50% or 25%. Sorry, basis points, 25 basis point, 50 basis point. 50 basis point, my opinion, is too strong. It's too much. There was a chart that I actually put up yesterday, which give me one second, I'll hunt it up. All right, so taking a little screen grab of it. So this is the chart that I was referencing the other day. Oh, it doesn't make it any bigger with that. That's fine. Look, basically, it's sort of showing sort of the CPI 1970s. So I was correct with that, because I was like, 1970s. I didn't quite know the history well enough of that. But the red line here is sort of showing sort of what happened with inflation. When they sort of cut the rates, it went boom, inflation went back up for a second run. This is a green line here is sort of where we're at the moment. Are they going to cut rates and potentially see another run up even higher with inflation? And I think they will be obviously well aware of this, but I think they'll be very scared of this. And while they're sort of thinking, are we going to do 25 basis point, or are we going to do 50 basis point? Well, 50 basis point very much leads to this kind of scenario, potentially, if you cut them too early. So that's why I don't think they'll sort of do a big bomb into the water. I think they'll do a little bit of a put your toes in first and see how it goes kind of approach. So yeah, that's my feeling as to sort of the 25 basis point. But the market is going to tell you they're going to be doing 50 basis point. I think to soften the blow for when 25 base point comes. So, I think it's the fourth now, so we can revisit this one on the 18th when we have FOMC and sort of see what they ended up doing. But the point with that being is that those cuts are coming. They are definitely ahead of Aussie, sort of the RBA in terms of when they're going to cut. Like, we may not be hiking anymore. We may not be, well, we're still going to hold the rates, but we may not be as sort of tough, staunch, stoic in our sort of hawkish view anymore. But still, if the Fed cuts, the general result with that is going to be a weaker US dollar, which we are going to get some flow ons as well. I mean, you've got other factors with Aussie as well. Obviously, it being a major sort of um, risk asset. So, if equity markets are tanking and that's also going to weigh on the Aussie. So there's a lot of parts in that to it. But it doesn't mean that sort of like, oh, here we go, the game's over and we're coming all the way back down here. Remember, if we get back down to 66.40, this level down here where I put this little price target for it, this is still only 38% of this entire, well, 38% from this move from the lows to the highs up over here. So if we do come back to 66.40, 38% retracement is still a very bullish momentum, considered a very bullish momentum. So, you know what I mean? There's a lot to sort of say that the Aussies, this is just a healthy sort of correction pullback. And as we saw with DXY recently, it's been coming off a very strong support area. It had a lot of technicals sort of lining up with it. So it was due for a bit of a bounce. It was the pain trade had shifted to the other side, excuse me, and this is the result of it. And this is why I've been shorting Aussie through this period over here. So yeah, look, we're coming into GDP in what, 40 minutes or so. Um, we're already down into this first little buy zone here. So it'll be interesting to see what they do with it. If they decide to run US dollar up, I would say we could probably push this down, because if we flip onto a daily, have a look at this on a daily. You can see this is why the buy zone is here. But realistically, I almost wouldn't. I suppose this buy zone kind of lines up. Maybe sort of drop this one down here, this little crossover zone here. But I think this is more likely, particularly if we take out 66.90, that we see 66.60 or that 66.40 for the retest. And again, just going back on previous things, we could see this is the resistance. This was the breakout. Watch the videos from this week. I said, look, once we pass 66.40, it's going to go. And after that, look at the break. It went up nearly 3% from that 66.40 move. So if we get back down there, there's going to be a lot of reason for this to sort of get a bit of a bounce, in my opinion, anyway. So yeah, we'll see how we go. Really, it'll be interesting to see how this daily candle goes. I wouldn't be surprised if we see another big, long daily candle coming down here. There's a lot of profit on the table here. DXY's really all over the shop, which I'll get to right next. But you know what I mean, if they decide to sort of squeeze out a bit more, equity markets coming down a bit more, weak economic data for GDP, for sort of the Aussie dollar from the RBA, yeah, I can see this sort of coming down a little bit more before we actually start to see some sort of sustained bounce. In saying that, I just did close a bunch of Aussies in the 90s because, as you know, 90s is always a big swing point. It doesn't matter which way you're going. It seems to be a reoccurring level in which you can generally sort of see some resistance. Look, if we look at this level around here, we saw some 90s for a bit of a pushback. It held for a bit here. Same back up. Where are we? Back up over the 90s over here. This is obviously, yes, we got some wicks that went above, but really the 90s was the area. 90s was the area down here. 90s back into it over here again. So, you know, I mean, this could be setting up for a little head and shoulders. We could see a push back up to 67.50 even. But I don't sort of see it necessarily unless we see a sell off on sort of DXY and sort of equity markets recover in the short term. Or maybe even if we get super strong GDP numbers, we could see a little bit of a pushback up here. But I think you still need to respect the fact that we broke this channel. And this is why we saw this sell down here. But it doesn't mean that the sell's over just because we come back into that first buy zone. All right, so that's the general overview. I know I sort of rabbited on for a bit there, but you know, as I said, 66.90 is where they want to keep it above. If you do, look, there's a lot of sort of resistance through here. I'm not rushing into buys with Aussie. That's one thing. I do want to get long, but I'm not rushing into buys. All right, let's flip on DXY. And this is what I'm talking about. This thing is absolutely all over the place. So I had the price target just up here. Where did we get to? We got to 91. I had the price target, just a round number. I think I said 2. 92 or something, didn't I? I mean, I've got it linked here at, or marked here at like 95, but pretty close to it kind of thing. And this is what I've been going on about, this whole sort of squeeze through here each day. Have a look at the videos in that, because that's what it is, and this is why we've seen this move. People are acting like they've been caught off guard, but it's been there the whole time. Anyway, so at the moment, it's actually respecting the underside of this previous support quite well. Because it's 1, 2, 3, and you could almost sort of drag this, give an argument for this being dragged through here to sort of be coming up the top side here as well. So it's very hard to get a proper read on this because, at the moment we're getting higher highs and we're getting lower lows. So, there is a sort of a thing of so it's in a different color. Like, I don't really trade these, but I'm aware of them. Let's just make it green, whatever. This kind of thing where you've got a bit of a triangle. But, people probably do this better than I do, but whatever. But the idea being that generally these are reversals. These diamond tops, that's what they're called, where you're getting higher highs, lower lows. Basically, they're just clearing out the book. Like, nobody knows what the hell's going on. You're making highs. Are you going high? You're breaking down. Are you going lower? And it's just going do 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 do. So again, look, these are the levels you got to sort of look to get underneath these previous areas of support. Resistance. And you can see it's played its part as support just here. So you want to get down underneath this. So let's move our alert down a little bit. And that would be your confirmation that we see a little bit of a rollover with DXY here. But given sort of like, my history of sort of trading and trying to be sort of picking sort of like reversals on DXY, one thing I know is like when it looks technically like it's stuffed, that's when it runs up even higher. And this is the reason that I stuck with those Aussie shorts as well, among the other things that I just mentioned a moment ago. That I know that these things, it looks, oh, look, it's broken this little technical channel. People get short. Oh, here we go, breaking down. It jams back up and does this. If you look at sort of a bit of history with the charts with DXY, as it turns around, it doesn't turn on a dime. I mean, you could say some of these, but I mean, look, this looks like it's coming back, boom, boom, boom. But look at these moves here. This is start of the year. I mean, look at this, higher highs, lower lows. Looks like, that could be your little, hey, here we go, diamond top. Look at all the wicks here. And what does it do? Just jams up higher. Yes, eventually it comes back down. But the point is, it very much likes to sort of look like it's about to sort of break down, and then it traps a lot of people and squeezes out the last little bits that it can. Another thing with the DXY is it doesn't turn around, as I said, on a dime. We see these moves up here. Here's a lower low down here, and then jams it right back up here, and then sort of starts to come down. So these are the kind of things that we're sort of looking for with DXY as it sort of comes up here to sort of roll over. This is the general plan. This is what I sort of have been sort of saying. There was a good reason to sort of get up here so they can sell it. Because, look, cuts are coming. That's going to weaken the US dollar. It doesn't matter whether it's a 50 or a 25 base point. It's going to weaken the US dollar. And so if you're selling it, and you get to this point here, why not sort of just jam it up and start selling it here? Because there's better profit to be made from, say you're coming down to this level, you got either continue to sell it from here, or you drive it back up and then you sell it from here. One's 3%, one's 1.45%. This is just an example. So, there's a reason that sort of these things sort of, as cliche as it is, things don't move in a straight line. Well, no, they don't. And this is why. This is what people do. They sort of jam it up here. All these people are looking for this, and like, look at the news around this time as well. Everyone's going, oh, it's a dollar destruction and it's all going down and yada 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 and all this kind of stuff. But you know what I mean? That's when people sort of pile on and then they sort of jam it up here and they get smashed. Well, that's unfortunately the name of the game. You know what I mean? So anyway, look, long story short, we are seeing a lit at the moment. It is kind of looking like it wants to roll over. We're moving into overbought territory. I don't think we're necessarily going to see a big drop down. I don't think it's up the stairs, down the escalator quite yet. I think you could potentially see a couple more days of stuffing around and then see a drive. But eventually it will get this leg here. Whether this leg comes all the way down here or comes to here or comes to here, well, you got to play that by ear and you got to sort of see what's happening at the time. But realistically, this is how these things work. It doesn't matter what time frame you're on. We find support, we move up, we find resistance, we come down and test for support again. And this is where this is how you read trends. You're either going to get a high, a low, you're going to get a double bottom, or you're going to get a lower low. Higher low, reversal moves up, double bottom, potential range, potential reversal, lower low, the whole system starts again. You come down, you find support, you move up, you find resistance, you come down. And this is the thing, it'll happen time and time again on every single time frame. So these are the things you got to really sort of look out for. Oh, geez, Aussie is just getting walloped here. So just got to take a few more off. Just bear with us 1 sec. All right, I'll try and sort of chew through this a little bit quicker, man, because yeah, just sort of rabbiting on a little bit with it all. We've got 2 minutes to 11. See if we get the volume coming in with metal. So let's have a look at what's happening with gold, because we got this smackdown yesterday, and again, this is why we chart things out, and this is what I've been saying. This level down here, this is where buyers were, came down here, buyers were there again. So we found that spot. You know what I mean? Like, I actually caught the shorts down through here. I had a buy at, like, I think, was it 78 or something around this level here. But even as it was coming down, I got rid of my shorts in the mid 80s. And then sort of like I sort of go bang, do another leg down, and I was just like, I don't know. It was late. I had a pretty good day. I didn't want to push the envelope with it. I actually ended up getting back in at 90, out at 94, just for a little quick trade. Look, it wasn't necessarily a quick trade. It was just that it was more sort of like I sort of fell into that whole idea of like, oh, geez, maybe I could. Maybe it is going back up, but you know, this is before I could probably see the charts and can see that, you know, there's still a little bit of work to be done here. Like, you know what I mean? I wouldn't be surprised if we could get back in at low 80s. I wouldn't be surprised if we see something similar to this, how it came down here, wicked up from the 70s, and then this one didn't even look back. Came down here. And this is what I was saying a couple of weeks ago, because remember, this is the top side of that range. This is the range that we were sort of working with. We've had the retest, pushed up here, didn't get the higher high, had the negative divergences. Remember on the lower time frames, these ones moving through here, double negative divergence, and then we sell down. And we're back into our range. And this is the thing, you got the little arrow here. Here's the plan of attack, bang, down here, and then to move back up. So look, that's where it is with gold at the moment. I think if you sort of really, if you fail underneath 24.65, look, I don't think it's dead. I don't think we're coming back down to 23.50s. Anything could happen, you know, if they drive up DXY, of course. But as I said, look, you know, with the fact that we've got the cuts coming for the US, I think that's going to keep it buoyant. As long as it stays out the top over here for the moment, it's not too bad. We can put a little box around this like this and call this our sort of breakout box. This is the area that you want to sort of see it. See it sort of really sort of break out to the top side, or if it comes down underneath this, then you look for where you might potentially see some entries. Let's drag this across over here. You have a look for where you might be able to see some line up entries in that. So, you know, maybe you do get back down to 24.30 and you get that sort of 61% sort of pullback and really shake out some people, because there's going to be a few stops down underneath here, you know, particularly with this last push and that previous one coming through here, people that were trading this big range. You know, if it fails and comes back into the range, they're going to be people harping on about failed breakouts. That's fine. Shake them out, fear them out, get back in around this 24 thing, and then you've got that little move potentially to sort of come back up to sort of see if that really is the case and if it's going to move out to the top side here. So, yeah, for the time being, I think I'll hold fire on it. It certainly, in the short term, is putting in a little bit of a move like this. If we drag this out, it looks like a fairly well structured little channel that's coming out. This is on the 4 hour. So, you know, I mean, get back above 25.07, then you can go back to the top part of the range,
because this is pretty much a midway. Look, if you carry this right through, this is how ranges work. Generally, you'll have two sides to it as well. As you can see, like, this is your full range, but inside the range, you've got a little mini support, which becomes resistance, support, comes through, it's resistance, you know what I mean? So as long as it sort of spends a bit more time in this upper half, you're obviously leading more to a breakout to the top side. So yeah, for the time being, I don't think it's any sort of super rush. If I can get in the 80s, I'll probably have a shot to sort of see if we can get a little bit more of a bounce and then sort of revisit the above 2500. But the fact that it tried again, 1, 2, 3, 4, 5 attempts up to get through here, it didn't. It's only and broke this little sort of rising support. It's only natural that it broke down. You know what I mean? Even look at it's a very structured breakdown because here's the break, retest in line with that break level. Double test, bang, down. Okay. So yeah, that's it with gold. I would hold fire a little bit. If I can get long in the 80s, I'll give it a shot. If it breaks out the bottom side here, hold fire, and I think sort of down in this sort of like area, let's put a little buy zone for it, which would be around this kind of area through here. This would be the buy zone. I mean, this is wishful thinking, but if you give us a shot to buy it here, I'm going to buy it here. Around the 61%. And also a bit of a, take the stops out here, take the stops out around here. I reckon this would be a pretty good level to get long if possible. All right, let's flip across. What are we going to do? Copper, right back, right back into the buy zone. This is what I was saying yesterday, and you can see this is a good example of buys are here, buys are here, buys are here, buys are here. And as soon as we see an absence of buys here, look at how big that move is down. That's not like, it's not like it sort of came through and did this. Little sort of candles. No, that is the market bailing out of it, coming, okay, down here. And look at where it sort of hit, apart from the fact it's right in the buy zone, is the top side of this channel. This falling resistance here has really sort of played its part. And this is what I said. So I took a starter in this area. We'll see how we go. I mean, look, it could still come down lower. I'm not saying that. We could be looking at a big double bottom and come back down underneath 4, come even lower, shake all these people out. Who knows? Again, I think a lot of it's predicated on what's going to happen with the US, with USD. So I think once cuts come, I think that'll stimulate everything. I think a lot of the narrative will change again, and I think we'll get a big move back up over here. But that's 2 weeks away. So, there's a lot of stuffing around. We could just find ourselves in a little range down here. So again, it's not like, I took a starter on it, but it's not necessarily like, I need to be the first one into the party. You know what I mean? There's a big move coming if it does get onto its trend up through the top side here. And then we go China. China's playing pretty much exactly as we said. Look, back up here, above this line, up into this zone. Look, this move will still come. This is going to help Aussie when this does come, because this is a little bit more of, it's not DXY, but it's kind of like, it's a good barometer for sort of Asian currencies against the US dollar, just because obviously how big China is. So, you know what I mean? It's come back up here. It broke all these levels, squeezed back up like we sort of thought. This is why we have the line here. This is the path we thought it would take. It's finding resistance. Now we've got to see what happens on this leg here. Are they just going to drift it, or are they going to absolutely melt it down? But I think first price target's hitting that 7, which I don't think is too bad. But the main price target is 690. As you know, going way back here to this lot up here. When was this? Geez, back in October. So 10 months or so I've been calling this move down to this 690 level. Obviously, there's been a lot of stuffing around with it all, but the price target still remains the same. So I'll have to see how that sort of plays out. All right, quickly flip across to silver. Just have a look at how it's going. Back at the 61%, we found a little bit of sort of buying down here. Look at this, it just creamed through this first buy zone. It's a little bit ambitious, but this is what I'm saying. So like, while things are really hammering and moving in one direction, look, we pretty much almost got to this. We got very close, like, and this is potentially, You know, I mean, you could probably actually say that was the breakout point, which actually is more the breakout point. So I would say that's a completion of that move, which, as we know, the distance of this channel, the height from the top to the bottom, from the breakout point, and there's the completion. So that was a missed chart of me. I had it just here and came back here. I mean, we're talking a couple of cents, but the idea is still the same. Once that move completed, we saw it sort of tick, 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 and then bang. And what I was saying a second ago is like, you know, while it looks like it's, oh my God, it's charging, here we go, major breakout, and then no, and comes back to the 61%. These things, and that's why sort of people want to sort of like buy things and hold things forever. And I'm like, you know what I mean? It depends. Like if you're a sort of staunch investor, and particularly if you're holding sort of like, you know, physical and this kind of stuff, well, yeah, you ride the highs and the lows. But if you're trading, depending on your sizes and everything and your risk management, this kind of stuff will blow you out. So this is why I trade my style. I'm in and I'm out. And, you know, I miss the sort of, you know, 500, 600 point in one moves, unless I'm trading copper. Um, but you know, at the same time, I'll take sort of 15 trades in that 500 point move, and I'll just hammer it time and time again. Like I mean, Aussie was a great example of this yesterday. Sort of getting out, get back in, get ride the second wave, so you can just put it on repeat. So anyway, we'll see how we go. I did say yesterday, sort of we were around this area here. I said, look, I'm not gonna sort of fire off onto anything. I think this could potentially, gee, they're just stuff around here. We've come down even a bit lower down here. I'll wait to sort of see how things come down here. I think if we could sort of even drop down a little bit further, another 50 point drop down here, I think this would be very much a good sort of buy area, 2740s. To sort of see how we're doing. It's been not respecting anything. This is just a meltdown here. Look, it was nice. Boom, boom, boom. A little bit and then crash. So it's really people are just heading for the door with this thing at the moment. So we'll have to sort of wait and see how this sort of plays out. But again, I think it's just a matter of time. You know, I think once the cuts come, that's when we'll start to see the next leg of things happening. And really, this will just end up being something to this sort of effect. And I do pretty much picked up that we'll get our breakout after that. So we'll have to wait and see how that plays out. Shall I get rid of these? Too scrappy. All right, cool. That's it from me.